Hello and welcome. My name is Mike Hamilton from Trade the Easy Way, and this is our normal weekly prep session. So, what I'm going to talk about is some of the bigger questions. Where are we likely to finish the year? Is there going to be a recession ahead of us? And if so, how can you handle it? What could you trade? How can you protect your capital? Let's just look at where we are in a couple of key markets. Sorry, this is wheat. We'll come back to wheat. Let's take a look at the Nasdaq, because what the Nasdaq does, the rest of the markets tend to follow. So you can see here we are definitely in a critical point here, where last week's drop. This is a weekly chart. Last week's drop in the Nasdaq was so steep, it took us out of this channel. And this little push back today is just taking us on the underside of that um, funnel. So this area is still shortable. Let's look at the daily. Oops, oh, this is really untidy. So yeah, I was looking for Nasdaq to get back to 20,000, and that's still possible. Let's just peel all this back, get rid of all this rubbish. Let's take a look at where we are in this last move. So if I look at the ratios on this last move on the Nasdaq, you can see that the most recent high up there on the 22nd of August was right into that ambush zone. And it's head and shoulders as well. So you've got a shoulder, a head, and a shoulder. So at the moment we are breaking down. This big drop last Monday broke down through the neckline, and subsequent pullbacks are selling. So start of the week, it's just stand back and let this market settle down. If all we do is push up into 1900, and we're 18,700 roughly. If we push back into that 1900 and sell, then that is an opportunity to get short. In fact, I would even, if you're not at your desks, if you're not day trading, I would look at putting an order in the book for that 1900. It's 50% of the move, and that's with a stop above here. So you're risking that much money, and see if that could drop back to 17,230. You can see the 50-day average. So once we closed under that last week, we broke down through the 50-day average. This is the mother of all moving averages, or at least that's what I was taught. And I would stand by that. I think it's a major indicator. And it's possible we won't even get back to that. If we start to close underneath this 18 and a half today, or in the next couple of days, then this could be the point to get short. The steer clear if we have a big push above 1900. So what have we got facing us this week on the data front? We've got a big week for UK, because we've got UK jobs tomorrow and monthly GDP on Wednesday. And then we've got, for the US, we've got inflation on Wednesday. So that's a biggie. I've even got ECB. I forgot we've got ECB on Thursday. Potential rate drop in Europe. Markets are predicting a rate drop in Europe on Thursday. Now they're predicting a big drop from 4.25 to 3.65. Otherwise, pretty quiet on the US front, apart from that inflation. So I think if let's have a look at the euro. That's taken me by surprise. I've forgotten that ECB was coming in. So the euro has had a big pop, closed above. This is very bearish. Closed above 23 highs, and a few days later closed lower. And on Friday, we just retested that December 23 high and failed. So it looks like this is, if we stay underneath that resistance area here on the euro, this could start to wind down. Welcome. Okay, so with ECB on Thursday, this could be a good short. If we see any push into that 110 with a stop above this 100 and 150, stop above the 6 September highs, then if this then subsequently breaks, stays under that and subsequently comes under that 110 mark, then I think this could wind right back to April lows. Look at the pound while we're at it. That's a huge march up into that extension, into that 13250. That at least needs to reconnect with the 130. We come under 130 and then close back up, then expect that to potentially push into 135. But it's a bit, like I said, it's a big week for the UK this week, so that I would expect to see quite a lot of volatility in that pound. A quite a decent sell signal there last Friday. So any push into 13180, 132, that's my recommendation. Try and short that high with a stop above the Friday high. See, we just come today, we just retested that support. So we've broken out, retested that major support. So that looks very interesting. That's a very interesting chart. Right, let's move on. Let's look at FTSE. Let's get a bit of speed because I'm taking time up here. So talked about how, yeah, look at that. Let's tidy this chart up. So this FTSE has come into a lot of support. So this is very bullish because if we stay above this 8200, so tomorrow that's a decent pullback, 8200, with a stop under 8145. Wait till the data's come out, see what the reaction is. Data's at 7 a.m. UK time. Because if this holds and we stay above that pattern, that bull flag, then 8500, 8600, here we come. Ever since here's the mast of the bull flag. Where is everybody these days? There's the mast of the bull flag. So we've had a significant 1, 2, 3 wave pullback. That's potentially a new wave 1 with a wave 2 pullback. So we come back into the big wave 1. So if we continue this push and break 8500, then we could start to push into 8800, 9000 into year end. One likely one sort of proviso on that. I think 85 is going to be sticky, so we might sort of really hover around 85 for a while, pull back, and then run. But bear in mind, this is a very range-bound move here. We're up here in May, and here we are in September, still only trying to get out of this range. So yeah, take it nice and slow. Don't fill your boots. Be very aware of your risk ratio, risk parameter, and see if that can push up. But in a consolidation period like this, it's very normal to break the consolidation support. Very normal, but very bullish if you subsequently close back above it. So this August pattern, this August process is very bullish. Let's just see if this holds. We closed above the 50-day average today, so there's a lot of boxes to tick in that. Obviously, scrap that if we just suddenly break today's low and drop. Scrap that because that's just going to fall over. But in the meantime, volume is higher. That's a significant close higher, and the path of least resistance is up at the moment. Right, let's look at, let's step aside for a minute, just look at Asia. Here's Nikkei. So a big drop. We've seen some very strong data coming for the Nikkei. So carry trade, in other words, borrowing in yen and lending out in other currencies is getting rewound as Japan strengthens. So all we've done, so a couple of very deep, very, very deep drops into August. So this is a scenario. This is an interesting chart because this is what can happen in Europe and US if we're not careful. This is why it's good not to get too bullish because look, we had a three-wave correction down here. When we pushed up, we couldn't get through that resistance. We attempted to, and then started to roll over here. So this is something to watch out for in the FTSE and the US indices. If all they end up doing is getting mashed up into resistance and starts dropping, and then get short and stay short. In the meantime, yeah, because that's a lovely big push up from there. But it looked good right up until early September, so a significant drop right early September. So that's why I'm suggesting in the NASDAQ and the US indices, we have to be very careful. Right, gold. This is a good bullish consolidation, and as I've just been explaining in the FTSE, okay, so we're range bound in the gold, and it's a bullish consolidation after this move up here. So I think this needs a deeper pushback, and it could just be that that inflation data gives us that, because if we pull back, reconnect with that 50-day average at 24.50, 24.60, then that could be the catalyst to take that up to 2600. So I would be looking for that to pull back into this August support. I think there's a decent chance, if you're very patient, that that could fall back into the August support. Right. Just get the drawings cleared. Right. Now off to commodities, other commodities. Very, very significant. Here's another consolidation. So we have a big push up. We pull right the way back into the breakup area. So we boomerang right back to the breakup area. And then we broke underneath it. But then we close it immediately higher. So that move, end of August, is very, very bullish. If you ever see that set up again, then it's worth taking because it's a high probability trade. So we pushed into 580. We're coming back. So I wouldn't be at all surprised to see us come back to $5.5 on the week. If that's so and holds, I think then we can start to grind through. Yeah, maybe over weeks and months here. I'm not looking for a quick spurt higher. It's possible, but I think this will grind into the year end. I think we'll finish the year around about the 6 mark, maybe 7, and then potentially next year we can start to push into 7, 8, 9, 10, $10 if I'm right. I'll keep you posted. But I like the setup in the wheat, and I think 5.5 is buyable with a stop underneath $5. See if that works. Right, let's look at silver. So I'm backtracking on the metals again. Now this is a potentially good place to buy silver. Big push up here, deep pullback into the breakup area. There's a potential wave one. This is a potential wave two. Volumes are picking up here. So if we can close above 29.30, I can see this finishing the year on a really good move up to 35. If we stay relatively range bound, then we're not going to get much over 30. And bear in mind we're only 28 now, that's not a lot of money. But again, next year I would see that pushing higher. Right, let's look at, I've been talking about Prudential off and on for quite a long time now. I was suggesting that if this could get a pickup, this will be a good buy. It's not done it. Still got bearish volumes, still got lower closes. Uh, guess what I'm going to say? If we come underneath this £6 mark and then close higher, then I'd be all over this. So let's see if we get a deeper move. I mean, that will be a perfect setup for me. Drop down to 6 or lower, close back above 615, buy 615, stop underneath that low, and then let's see if this can wind up. Otherwise, if it just keeps closing lower, then obviously it's ain't going to work. So more patience is required on Prudential, but that's still a good one to watch. So I'm backtracking. We're not talking about oil. This is ranged to December lows and April highs. April? Yeah, December lows, April highs. It's very bearish but look at this volume today. And we're just sitting, just nudging right into that December 2023 lows. One more higher close, and we could start to recover to 77, 78. If we let's get, if all we do is nudge into this resistance and sell, this is going to come down to 65, maybe even 60. But close above here and continued increase in volume, and I can see that recovering. Cyclically, this is a good time of year to buy oil. In a 20-year cycle average, oil does normally pick up into the triple witching and into October. just a reminder, triple witching, for those of you who don't know, triple witching is where all the options and futures contracts roll over, expire and kick off again. So it's a significant date in the diary. Um, right, let's zip through some stocks. BT has been, ever since we talked about this breakup in May, the pullbacks have been getting bought. So big move into earnings, drop back to 120, and a big drop here on the 20th of August. Reconnected with the 50-day average, and we're grinding higher again. Volumes are not significant. If we ever close underneath 130, be careful. Why do I say that? Because that's the big volume spike. That seems to be, this bar seems to be governing what's happening with BT at the moment. So we started closing above it last Wednesday. Big move on Thursday. Now we're consolidating. So we could see, I wouldn't be surprised to see a push back to 135. And if that holds, then we should be coming to 150 plus, potentially even £2 if that works. Things like tallow, that weakness in oil is telling on this stock. Uh, yes, 22 is crucial. So this is one to watch. If that oil um, holds that December 23 low and starts to build there, then this could build as well. This could build. So I wouldn't, we could easily see 2022. But if the volume starts to pick up on that, then tallow is definitely an option. Um, right, what other stocks do you want to look at? I think we saw some movement in, let's look at Barclays. Well, there's Lloyd's. I mean, it's a support and holding. Direct Line has been very interesting. Right, Direct Line is suffering. I still think that needs I've been looking for a move into 170 on Direct Line. So I'm happy to see that drift back at the moment. Vodafone, okay. Oops. All right, let's go and find Vodafone. Ooh, nice move into 78. So this is a crucial point now. If Vodafone closes under 75, be careful. But very nice volumes. Yeah, it looks as if it's pausing while we get this data out of the way. But if we break that high, I can see that going back to 80 plus. We break that high. So huge amount of support here. We just need to stay above this 77. That last touch of 68 was good. I mean, based on the volume picking up here, on that evidence, it looks as if these highs are sustainable. Yeah, I mean, I think 87, 88. We were there in February last year, weren't we? In fact, let me update this. Let's take a look at this 23 move and the 24 lows. Yeah, look at that. We just crashed into that drop zone from May 23. I mean, if this breaks, we should get back to the pound mark. If this continues its push higher on volume, £1 looks very useful. I think there's still got a relatively low PE ratio, hasn't it? Um, Things like QQ. What a year QQ's had. And Rolls as well. Rolls is still, or the dips in Rolls are still getting bought. That's up from 90p. Wow. 90p to £5 in not that long. Huge. Absolutely huge. Right. Anything else you want me to look at? Otherwise, I'll zip off. Right. Well, it seems to be overdue a pullback. I mean, because that's been on a massive run. It started, it's failing under this trend line. I mean, it could come all the way back to £357 and still be relatively bullish. But this year's move, we were down there at 290, peaked just above £5. So we could come all the way back to £4 or even 340 and still be well within the support. See, is that capital? That's capital, isn't it? Yeah, capital. Looks good. It's struggling. It's struggling, but it's holding key support at 17 and a half. Um, could have another fall back into 15. So we were down there at 15 and a half recently. I mean, it all bodes well. This big leap on the 9th of July has held. So the key is going to be getting out of this 20. If we keep closing lower under 17 and under 15, then this is going to come back at least to 13. If at some stage could easily drop back into 15 and 16, 17 again. Otherwise, if in the next few days we can get above 20, then we could finish the year on 25, 26. Yeah, close above 20 and we should be heading for 25 at least. All right, I'm going to leave it there. Thanks for joining me. I hope that helps and see you soon. Thanks.